Good evening, ladies and gentlemen, and welcome to our webinar presentation with Bruce Marshall, where he is going to tell you why his hybrid strategy is up a whopping 30% in a down market, as well as information on his exclusive mentorship program. Some quick housekeeping to go over. You may see some interactive features like polls and offers popping up during the webinar. Also on the right hand side, you'll see a live Q&A tab where you can ask questions that will go to our moderator team as well as Bruce at the end of the presentation. If you'd like to maximize your screen real estate, you can minimize the chat section via the down arrow just above the chat. And you can also maximize the video by hovering over the video and clicking enter full screen. And now to start us off this evening, I present to you the one, the only, Bruce Marshall.
Hey guys, this is Bruce. Sorry for the little delay there. I was trying to get my screens up and running. All right, they got kicked off and had to restart them. So we are good to go. All right. I am so glad you guys are here, guys and gals. We got a lot to talk about tonight. We are going to talk about making money in the market and, more importantly, how to be consistent over a long period of time. And we've titled this How I Beat Wall Street 9 years running because I have the bias portfolio, which will be in the 10th year in 2023. And I have had, we've never had a down year in 9 years in the portfolio. So it's a pretty awesome, pretty cool thing, pretty fun to be a part of. So, first of all, welcome. Thanks for being here. I appreciate everybody's time. We are here to talk about serious money. um, there's a difference in types of money that we manage. This is more focused on, again, serious money, how to be consistent, think about IRA money, safe money, that type thing, how to manage it. I've been doing this for 33 years now, and I've taken all of those years of trial and error and experience and knowledge and combine that into one program, and that's what we're going to talk about tonight. We've got a lot to cover. I'm going to jump right in. We'll have plenty of time to talk about questions after at the end of this. So let's just dive right in. And first of all, we have to talk about the market, of course. And I call this a um, whack-a-mole market. This is a garbage market, chaos. There's no trend at all to this market, and it makes it very, very difficult to trade. And a good part of trading is reading the market and that type thing, but we do that through a lot of different ways. We're going to talk about that. But in this market, we're up and down, wildly in the same day. So it's very, very tough to trade consistently. In fact, if you notice the quote down there, um, average U.S. equity funds are down right now about 9% on the year, according to Goldman Sachs. And the bias portfolio that I manage is up about 30%. And that's an overall portfolio of trades. And that's key to growing wealth over time, and being consistent is knowing how to manage a portfolio and not just knowing how to make money on a trade or a one-off kind of deal, right? And I am here. We've got a great trading community at Simpler, and especially in bias, and I'm here to help you guys and the trading community to take advantage of this, because I think we all can do it. And in order to take advantage of it, you have to take control of your portfolio and grab the reins and figure out what's working, or maybe what's working better, and adjust and adapt along the way. And that's been true for me over many, 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 many years. So as we know, there's all kind of uncertainty in this market. Volatility is just crazy. There's no trend in this market. I talked about that, and volatility, of course, is up. The VIX is consistently up in really the last 2 or 3 years, when COVID started, and then up to now. Crazy volatility. I don't think it's going away anytime soon. And if you look at where we are as far as inflation, we know that inflation is at a 40-year high. That's eroding our purchasing power. There's really no place to hide. Um, you know, Stocks, bonds, real estate, is getting hit now. Everything, gold, commodities, crypto. Do you want to step into crypto now? I don't know, maybe. But there's a lot going on in all these areas. And to me, in this market, we need to be focused more on actually trading. And we trade all the time, but you really have to trade, and you have to know what you're doing in this market in order to navigate it safely, right? So the question becomes, how do you navigate it? Well, that's what we're going to talk about tonight. Again, we're going to talk about safe money, retirement plan, nest egg, that kind of thing. Throughout this presentation, I've got a lot of trades that we have done either myself or mostly through the bias portfolio that I manage. And you'll see some of these kind of scattered throughout the program here, but I wanted to put these in here to show you with this crazy volatility, straight down, straight up, straight down, up, down, up, down, up, down, we're still making money. This trade made $3,500, $1,700, 580, 530. We'll kind of talk about these numbers in a minute. 660, and it's all good. But again, the point is, if you can make money in this kind of market, that's a really, really big advantage that you have over anybody else. So that's what the whole concept of this coaching program, the mentorship that I have put together, that's the whole concept that we're going to talk about tonight, and I want to try to relay to everyone. So think about this. Is this for you? Well, I think it's for anyone that is serious about increasing their trading results. We look for edge, we look for a little more bang for the buck, we look for all the things that we can to increase our trading results. I want people that are serious in the program, people that, if you've ever had the conversation or the thought, man, I'm spending more on commission than I'm making, and this kind of goes back to trading versus over trading, and when to trade heavy and when not to trade heavy. And there's a lot of variables in here, as we know, right? Anyone that sees themselves trading for a living or becoming independent, wants more freedom, maybe want to quit your job or retire early or things like that. And the bottom line, for people that want to guide their own destiny, because that's really what it's all about, in my opinion. So through this program, I want to make sure it's the right fit for people that want to do it. Also, what not to expect. And above all, this is not a get rich quick type thing. Trading is just not. You will hear all the wild stories, and there's a lot of clickbait out there. I turned $500 into 12 million in a week, and I never looked at a chart. You guys see that stuff. Delete it. It's not true. I have a very well thought out and very precise course material that we go through in the mentorship and the coaching program. And again, it's just not a get rich quick type thing. You got to put a little effort in, a little discipline, that type thing. It's not going to magically solve all your trading problems without some effort and without some discipline, because that's just not reality. And the main thing, or the last thing, is never expect to not have a losing trade, because again, that's not reality either. That you cannot trade without having losing trades. And it 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 does surprise me a lot of times. People will trade and they're amazed when they have a losing trade. I'm like, well, that's part of it. If you were a car racer or whatever, playing baseball, whatever, you're not going to win every game, you're not going to win every race. It just doesn't happen to anyone. So my name is Bruce Marshall. I know you guys know that, but if you're not from Simpler, not with Simpler yet, I'm the senior income trading specialist here at Simpler. I started trading in 1988. old dinosaur guy. I've traded professionally for over 33 years, not as a hobby, not for fun, professionally. And again, that's what I'm bringing to the table with this mentorship. I traded on both sides of the fence. I traded retail for a lot of those years. I traded institutional for a lot of those years. I worked on a bond desk, did all kind of everything that can be done out there, corporates, governments, IPOs, secondaries, all that kind of stuff. And through all that, it does give me a unique advantage in understanding, what's on the other side of the fence and what to expect, and working with different exchanges and different strategies. I've tried out everything over many, many years. And the crazy thing, or the crazy and cool thing, is that the strategies that I use, I've been using for 30 years. They don't change. It's we use the same kind of core strategies as, we were using 20, 30 years ago. And I don't see that changing it at all in the least going forward. In fact, the more liquidity we get in the market, these, strategies even work better. So, whatever information we have will be valuable to you for the rest of your trading career, literally. So I traded again, started in the late 80s, early 90s. I traded through the dot-com period, 2000s. Back at that point, I had over 150 million bucks that I was managing. And you think about that back then, that was a lot of money back then, and still a lot of money right now, but it was a really lot of money back then in those days. And I was pretty blessed to be in that position and have that opportunity and all that kind of stuff. And I wasn't going to mess it up, right? Losing money was just not an option for me because that was my job and that's what I wanted to do. And I was not gonna blow it up, right? So this is one of the trading groups I worked with early on. And I wanted to put this in here to show you the difference. I mean, we've come light years in the way we do business. If you notice, so this is me over here, and I'll turn my camera on here toward the end of the presentation, and we'll do a little Q&A and all that kind of stuff. But back in those days, I had a paper ticket. There's a buy or sell ticket, and I would actually, you know, call the floor. I would do, put in all the information here to do orders, and then I would put them in the tube on the wall that goes up, and like they used to do in banks, I suppose maybe they still do. um, and it would go to a wire operator. The wire operator would then process the order, and I would go get a cup of coffee. And because I wouldn't know what kind of price I would get for 5 minutes, crazy, crazy, crazy. And now we have way more horsepower than that on our any handheld device, laptop, tablet, whatever, that you can do from anywhere in the world that you have an internet signal. And it's crazy, crazy, crazy how the technology has come so far. I'll tell this quick story. My wife and I, we go to Costa Rica with our kids a lot. That's kind of our go-to place. And this was 5 years ago, probably. We got a rental car, and the guy says, "Do you want a hotspot?" And I'm like, "Sure." And he gives me this, the hockey puck hotspot thing. And we're driving I'm in the jungle, and she's driving. Open up my laptop, got a full signal, pull up, toss. I mean, crazy, crazy, crazy. I'm in the middle of the jungle in Costa Rica, and I have a strong signal. And I'm like, wow, it really is true what they say. You can trade from anywhere. So it's come light years. And again, that's a huge advantage for us in the way we trade now. And looking forward into the future, it's going to get better because more and more people trade, more liquidity for everyone. We're in a really, really great time. But back in those days, again, this was a long, long time ago. Back in those days, I mean, I had it all riding on managing clients' accounts, right? And, this is my discipline, this is my process. Here's my step one, step two, do this, do this. And I was mentored by a lot of great people on Wall Street over the years. I paid a lot for mentorship from those people because they're not cheap and their time is valuable and all that kind of stuff. In fact, one guy, this is kind of a funny story. I paid one guy he was a market maker on the floor, and I paid him $10,000 for 4 coaching calls, 1, 2, 3, 4 calls. And I did get a lot out of it. And I was at the point where if he can keep me from stepping on a landmine or blowing up or making, one good trade, and you got that covered, right? But I did that many, many, many times. So I'm probably up in the nice six figures over my entire career. But I had to, because managing these accounts, that was it. You only get one shot, right? And therefore it worked out pretty easy because I was disciplined, because I was scared, and it was my livelihood, right? But on the side, I'm managing my personal accounts, and that was a whole different story, because I wasn't following my trade plan. I'm all over the place on the map. I'm gunslinging and trading too much size and all that kind of stuff. And I'd make a lot of money, lose a lot of money, make a lot of money, lose a lot of money, and it was driving me insane. And I finally had to come to the realization that I had to pick a style and stick with it. You just can't, you can't be a master of all trades and all that kind of stuff. So I developed a hybrid income trading style. And if you've been trading for any length of time, there are a lot of different ways to make money, a lot of different styles, a lot of different strategies, a lot of different vehicles. And you really have to dial it in to, not only what works for you, but, um, you know, what makes sense, what you're comfortable with, that type thing. So are you a scalper? Are you a day trader, swing trader, position trader? There's many, many other kind of trades, right? Mine, again, over many years, probably 30 years, is hybrid income. It's more slow and steady. I think it works most all the time. As you can see, for the last 9 years, it's worked every single year. But no style works 100% all the time. It just doesn't. It's not possible, right? Because think about this: you have fast markets, you have slow markets, you have straight up markets, straight down, you have high volatility, low volatility, and different vehicles trade and act differently based on that volatility, based on the speed of the market, and that type thing. So things are going to work differently. So I try to figure out something that's going to work the vast majority of the time. And again, it took a long, long time to develop all this. And along the way, I was a training coach, a mentor on the institutional side for a lot of the new fund managers when they would come in. I was asked to coach some of these guys and mentor some of these guys coming in, and I enjoy doing it. And it didn't start out to be kind of part of my job description, but as it turned out, I was pretty good at it and I enjoyed it. So I did it more and more and more. And I coached a lot of new traders as they came in, and I saw a lot come and go. And over the years, I've always tried to think about, why do most people fail? And there's all kind of different reasons, but these really are the main reasons. I would say, you know, no plan. You've got to have a trading plan in place. You've got to follow a plan. You got to have some discipline, that type thing. In the coaching program, I'm going to show you how to develop. We will develop a plan together, and show you all of the nuts and bolts and all of the things behind the curtain that you need to know, right? But people without a plan, if you don't have a plan, you plan to fail. What that saying? On the bottom down here, swinging for the fence. That was a big one for me because I would always try to swing for the fence, and it just sometimes it turned out great. I'd make a lot of money, and then sometimes not so much. I'll switch over on the right side over here, improper allocation. So when I was managing, really large portfolio, I had to keep the portfolio rather balanced, right? Which means, in a lot of different ways, you can't be overweight in tech, or you can't be overweight in this or that, or whatever. But also, I managed by the Greeks, which I think you must know, and I can't be too long delta, I can't be too short delta, I can't be too long vega or short vega, and that kind of thing. Again, we're going to talk about all that and cover all that in the mentorship program. The one below that is not using technical analysis. We have some of the best technical analysis tools, indicators, etc. It's simpler. Find ones that work for you, and it makes your trading life so much easier, but also so much more accurate, right? And in the bottom, in the center, I'll go down here first. Never adopting a style. We talked about different styles. People I have seen in the past, people I've coached and mentored and trained, they'll try something for a month. That doesn't, it doesn't work. I'm going to try something else. I'm like, well, you say you want to be on the PGA tour and you go out and, never hit a golf ball before, and you go out and you hit golf balls for 3 weeks and say, oh, that doesn't work. I'm never going to make it. Well, you're not going to make it, right? Same thing with trading. You have to find what works for you and stick with it through good and bad, right? Failure to manage risk is the number one thing. I put it in the center up there. The best traders on Wall Street are the best risk managers. That's it, period. I mean, that's just end of story. And that is one thing that I have been very fortunate to learn how to do, and really enjoy teaching, is how to manage risk on a trade, so that you're not you never really lose sleep over a trade, because you can handle it if you know how to manage it, no matter what the market throws at you. And that is what we want to strive for, is have a stress-free um, trading ability, so that you can have the life that you want to have from your trading, right? And living the dream, right? Trading from the beach. I am literally living on an island trading from the beach right now. And I've been here for about 2 years, and anyone can do it, right? I've coached, mentored so many people over the years, from all different walks of life, all different size accounts, small, very, very large, and everywhere in between. And in the mentorship program, in case I forget, I have had people in the mentorship program that have taken the program some 2 and some 3 times before. It's crazy. And it makes me feel great, because I know they're getting so much value out of it, right? But you can learn to do this. Once you're consistent, everything changes. Everything, the lights go on and you're like, okay, I've got this. I can handle it. I can be independent. I can do wherever, trade from Costa Rica. I can do whatever I want to do, right? Anyone can learn to do this if you have a plan, correct trading habits, and overcome bad habits, and overcome trading fears. And trading psychology is a big, big part of that. We go into pretty deep dive into that as well, in the mentorship. So, you can do this, right? How do you do it? Well, you've got to know which strategies work, and when to use them, how they work, why they work, when to use them and when not to use them, or choose one over the other to gain a little edge that way. Um, Understand the bigger picture, what we're trying to do with the market and with a portfolio, growing a portfolio over time. Know how to stay out of trouble and avoid the easy mistakes that most traders do make. And I'm basing this on over 30 years of trial and error, and I've made all the mistakes. Trust me, I've made them all. But at the very least, I don't keep you from stepping on a landmine, and that alone could blow not only a trade, but could potentially blow an account, right? So we're going to put together a trading blueprint and ongoing guidance. I'll show you how that works here in a minute. But, again, how do you make it a reality? Is very simple. It takes knowledge, which I am happy to provide, discipline in learning material, doing it, sticking with it, and practice, practice, practice. So the coaching program, we've got a 5-part curriculum. Um, we've got 2 bonus um, classes added onto this as well. And this is a very thorough coaching program here. And we've got 50 slots available in the program. We always do 50 because of time constraints. It's not easy to work with more people than that. So it's kind of a more intimate group. It's very, very, I like it that way. It's very good. So we have the um, 5 core classes or strategies, and then we have 2 kind of bonus rounds for a 7-week program. This is the same program that I used to train fund managers back in the day. I've been using this for 30 years. It's a blueprint that I use. It blends the 4 core trading strategies, that I've used and developed over, many, 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 many years. So, I definitely think anyone can do this, and everyone needs a blueprint to follow. So why am I doing this? Well, if you've ever been around me, I love to talk trading, talk options, talk trading. And I get, we're at a cocktail party or whatever. My wife's always pulling on my arm. Come on, we got to go, and I'm like, well, we're talking trading over here. But I know what it's like to have to look at your P&L. I know the pain of looking at that P&L and knowing that you've got to explain to someone, you know, well, I need to add more money in this account. I kind of blew it up and I promise I won't do it again. Or, you know, at the end of the year, is this really worth it? That kind of thing. It's degrading. It's embarrassing, right? Because you feel like a gambler, right? But I do believe anyone can be consistent in their trading if they have a plan and follow it and know, and get the right knowledge. So through this coaching program, through the mentorship, what are you going to really learn? Well, I'm going to lay it all on the table. I don't hold back anything in this. We have 4 core trading strategies that you must know. You have to know, the nuts and bolts of them. And it's easy. Those things are very, they're not complicated at all. They may seem complicated, but anything that you do probably probably riding a bike when you're a little kid. Oh, I will never do that. Well, throwing a frisbee, whatever. The first time you do it, it's going to be a little awkward. This is the same way. Do it a handful of times, working with someone like me, going through this together over 7-week course, that type of thing. You get that stuff down and then it's gold after that, right? You got it. How to defend your strategies. That's so critical in trading. You've got to know how to defend strategies. You got to know how to trade both sides of the market, up or down, long, short, that type of thing. How to be a self-sufficient trader. All about volatility. You've got to understand volatility and not only understand it, but know how it affects your pricing and know how to use it to get an edge, right? We're all looking for edge in our trading. And it can be easy to do if you know what you're looking for. And, without it, you're just kind of throwing darts, right? How do we manage multiple income streams of an overall portfolio? Very, very important. Then we do have a little icing on the cake with some lotto ticket kind of end of day home run trades. We've been doing a lot of those this year. I've been doing a lot of those. I mean, I've done those for years, but the frequency has ramped up since we've got, and that's on the SPX primarily, because we've got options expiring every day of the week. We get 5 shots a week at doing that, right? Now you can do it on Tesla or Amazon or whatever, but the SPX is really ideally designed for that. And we're going to go in pretty good detail about that. Very good detail about that. And again, hidden risk and landmines that are out there waiting for you. And the whole goal is to take you to the next level, no matter what your level is, very beginner to very advanced. You will get a lot out of this. I promise you, there's just so much material here, right? And that's a good thing, right? Again, I really think everybody can do this. It is very systematic in the approach that I take, and I know it works because I've been doing it for so long. So the core of of trading, in my opinion, comes down to really 4 core strategies. You've got iron condors, diagonals, double diagonals, calendars, double calendars, butterflies, and these 4 core strategies you can trade any market, any volatility, any speed market, up, down, crazy, sideways with one of these strategies. Now think about this. If you're newer to trading, back up 2 or 3 steps and go, well, I only trade debit spreads. Okay. Well, or credit spreads. Well, if you put 2 credit spreads together, that forms an iron condor, right? If you put a debit spread and a credit spread together, that forms a butterfly. If you're trading long options, long calls, long puts, you can build a calendar super easy, diagonal super easy. So, these are the ultimate strategies that everyone who's a professional or serious trader uses, right? The other trades, of course, I like to trade long calls and I like to trade credit spreads and debit spreads and all that kind of stuff. They're variations of these trades, and we do trade those a lot. But these are the core kind of all weather type trades, right? And you got to know when to use them and how to use them and how to get a little edge out of those trades. And again, I've got some more examples here. Here's a triple calendar I did, and this was in the bias portfolio. You see that number 918 up here on the top in the center. I started the bias portfolio at trade number 1, and we're up to about trade number 9. I think it's 9. 60 or something like that. Anyway, this was not that long ago, 918. We actually did a triple calendar. Super easy to do. You just daisy chain the calendars together. Made $1,000, $1,090, about 20% on our money. Um, and that's pretty honest. That's pretty typical. About 19, 20% is pretty typical. And let me show you. So people will say that, well, does that style really work? And yes, I mean, here is we've since 9 years. I'm going to show you the returns here in a second. But over the last, well, this is actually since 2013, down there, 2013, lower left to upper right. That's what you want. And at the end of the day, it really doesn't matter if you do like this, but the more we can kind of take that out and make it streamline it a little bit smoother, the better, because it's great. You're up 100. Well, now you're back down to 10, and now you're up 150. Well, now you're down to 20. That'll give you an ulcer and all that kind of stuff, right? Um, so we want to be as consistent as we can, and again, that's really where my sweet spot is. So this is month over month for the last 2 years. It's been a crazy, crazy year, right? Or last couple of years since COVID. And I have been pushing about a 74% win rate over the long period, maybe 20, 30 years. It's always been in the 70s. Sometimes high 70s, sometimes low 70s. I don't remember it really dropping below that or above that, honestly. But again, to me, it's all about consistency, right? So before this, we had COVID. There you go. There's COVID. And check that out. It doesn't look that scary now, but man, when it happened, that's 2019 and this is 2020. Um, that was an all-time high at that point, and then we free fall straight down, all the way down there, and then boom, we turn around, ripped all the way back up. And that's the beginning of the year, and that's the end of the year. And then we just kept going. Crazy, crazy, crazy volatility. I was up 180% in the year of COVID. And we'll look in a second, I don't think I had a down month in the entire year for that year. So again, super high volatility, and these type trades work. They do. So right now, if you look back, so that's COVID, and that looks very tame. So this was horrific at the time, right? And then COVID happened, and we're like, wow, man, that's crazy compared to how much we got here. Well, look at this now. This is a much longer and deeper, more painful, market to try to trade than even the COVID market was. And again, it's still up 30%. So that's a testament to the strategies working. I'm not a genius as by any stretch at all, but the strategies work, right? I know how to do them. I can plug in the numbers, and I can do the strategies, I can do the math, and it's pretty straightforward and pretty easy once you know how to do it. So again, I've been using these same strategies 20, 30 years, using this blueprint from the 4 core trading strategies. And again, my results have been pretty consistent, right? Here is an iron condor. This is very recently. I think this is August. Trade number 930 in the bias portfolio. This was actually a day trade. Wasn't intended to be a day trade, but it was. And we made a $500 profit on an iron condor, was about 41%. And if you've traded iron condors or really credit spreads, we try to get about 50% on a condor. That one got 41.67. Here's another one, a different one, trade number 932. And that would make $700, which is 53%. And by the way, let me mention the bias portfolio is based on $50,000 account. I traded it at a $25,000 account for a while. And I will reset that every January 1 to kind of keep it at a reasonable level, because it's very easy to size up or down. If someone's trading 7 figures, they can size it up very easily. If someone's trading, $10,000 or whatever, they can do that as well, and it's pretty easy. And I work with traders a lot in doing that, and you'll see a lot of SPX trades in here. I really like trading the SPX. It's more consistent, in my opinion, and all that. We don't have to worry about earnings reports and all that stuff, right? And we get a much better handle on volatility and actually price action from charting on the S&P or the Nasdaq or the RUT, versus trying to figure out, the next move in Tesla, that type of thing. Not that we don't trade those, we do, but we trade a lot of SPX. So again, that was an iron condor. Here is a single calendar that we did, trade number 923. All these are pretty recent trades. We made $750. That was about 20%. And that was actually in a fairly short period of time. This next one is a pretty cool trade. This is a diagonal trade. I put this on today. So this is for tomorrow's expiration. If you were in the main room, you actually probably got this trade. I just did one. I did it as an example for one contract here. But a diagonal is a beautiful trade if you know how to do it. We're targeting 4,000, and we've got a really nice long profit slope to go into here. If we overshoot it, we've got a lot of wiggle room up here, 40 points of wiggle room on the upside, and 70 points on the downside. So all we have to do is go up a little bit, and we'll make pretty good money here. But that's your call diagonal, and there's a lot of cool things you can do with that. But I did want to put an example of one of those in there just to see. But any of these trades, if they were to get in trouble, you got to know how to defend them, right? And you don't have to defend them all. And, sometimes we will cut them loose, right? But it's a way to minimize our losses and really, really help out the portfolio by, keeping our losses as small as possible. Or if we do have a trade that goes against us, we can defend it, we can turn it around and manage it and perhaps salvage it and reduce the loss, that type thing. There are times when to defend a trade, and there are times when to just cut it for a loss, not going to work, and we just bail, right? But that's better than, trying to just say, well, I'm going to bail every time a trade gets in trouble. That doesn't make a lot of sense to me. If it makes sense to defend it, and if the math works, we always crunch the numbers, do the math, I'll defend a trade. And historically, about 80% of the time, I can turn a trade around from a losing trade and maybe make money, or at least lessen the loss. So if we have a trade and it's down $1,000 and we can tweak it a little bit and stay in a couple days, and then we end up with a $500 loss, I'm happy. I'd much rather have a $500 loss than a $1,000 loss, right? Lately in this market, trying to defend a trade, we've got whip saws back and forth, all that kind of stuff. We're still at about 60% success on defending trades and trying to, salvage trades and things like that. But, one of the big rules that I have is don't ever let a trade go to max loss. And, it is, you just don't do it, right? You just don't do it. We'll always limit our risk and be aware of the risk, but we never, with the type trades that we do, we typically have a lot of wiggle room and we'll have time on them and all that kind of stuff. So we never try not to ever let a trade go to max loss. Again, this is another trade example here. This is a combo trade. If you've never done a combo trade, this could open up a whole new world for you in trading. Basically, we did a double calendar and then we stuck a butterfly on the end. So nothing complicated about it. You have a single calendar or a double calendar, put that on as one trade and take it off as one trade. And then we add a butterfly trade on the end of it to give us more width, or maybe, reduce some risk on the trade, that type thing. It's pretty straightforward. Again, once you know how to do it. That trade, we made $1,900 on it. It took 14 days, but we made almost $2,000 on it. It's pretty good. And that is a bias trade. It's number 894. Again, all these trades that you'll see here tonight are bias trades. And one thing to think about too, well, let me show you this too. First, this was a double calendar. This one made $1,000, about 12% profit. That might not, 12%, that might not sound like much, but if you do that, that's $1,000. If you do that once a week, yeah, that adds up. Once a month, yeah, it adds up to what size account you're trading, right? But that's a simple or straightforward double calendar. And I know a lot of people maybe aren't as experienced with calendars or double calendars or diagonals or double diagonals, but that's exactly the reason you should learn these things. They're great trades. If you don't have them, you're going in the ring fighting Mike Tyson, who is the market, with one hand tied behind your back, because there's strategies that you could use that you're not using, and it makes a huge, huge, huge difference, right? So think about this also. trading less and making more. The crazy thing about this market is that I'm actually trading fewer number of trades and I'm making the same or more money. And let me tell you how this works. So in a predictable market, and I mean a trending market, if the market is just going up like this, and here's your, there's the mean, reversion to the mean, go up here, we buy something down here and it goes up here and we sell it and come back down here, we buy it and we sell it and we buy it and we sell it and we buy it. Lather, rinse, repeat over and over and over. Trending market, right? Pretty easy. Well, in a trending market, I will risk more. So instead of if I do a $5,000 trade, maybe I'll do a $10,000 trade or $20,000 trade because it's very predictable and we have a very good probability of making money. Now we might make a little less on the trade. We're risking more money to make less, but again, we know we can come in here, we can buy here and sell here and buy here and sell here, and we can lather, rinse, repeat, and do it over and over and over. And again, that might not sound like the right thing, but if you think about this in the market we have now, which is not trending, it's more like this. There's no pattern to it, right? It's just all over the place. So I'm risking much less per trade trying to make more. In other words, I will do kind of an unbalanced risk reward. I'll show you how that works in a minute. But on a main trade that I would do, like a core trade, I would normally do say 10,000 bucks. I've dropped that down to 5. Then recently I've dropped the 5 down to like 2,500. On the lotto ticket trades, I've dropped them down from like 500. I don't want to risk more than about 500 bucks on a lotto ticket trade, and I'm trying to make 10 times that, on a lotto ticket. But I've dropped that down to 250, 200, 150, I've dropped it down a lot. Here's what I was talking about a minute ago. Instead of doing 3 or 4 trades at once, I might do 1 or 2 trades at once in this market because, if we know the market will get crazy and we know we don't want to have to jump in there and start defending 3, 4, 5, 6 trades, right? So again, I'm trading more in and out trades, smaller size, smaller dollar amounts, but I get in, get out, take profits, right? You got to be safe in the higher volatility type markets. And I talked about those lotto trades. Here's we've done a lot of these kind of trades. These trades we did, that was a 3-hour trade. There's actually a trade right there. We made 1,150 bucks in 3 hours. We do this all the time. And again, this is on SPX. So we have 5 times a week we can do this using the SPX. It's pretty cool. And, again, what I'm looking for here on a lotto ticket is an unbalanced risk reward. I want to risk 1 to make 10. I want to risk 100 bucks to make 1,000 bucks, and that's probably our max, and if we risk 100 and make 200, high five, that's great. 300, that's great. 500, that's great. 1,000, yay, we hit the lottery. That's a lotto ticket, right? And get a bottle of champagne or whatever. Primarily, I'm using butterflies. You saw that diagonal that I did today. That's for tomorrow. Again, small, very small risk with a huge risk or a huge gain potentially, right? And here is a great example of one that we did. This was back in late October. Risk 105 bucks to make 1,545 bucks. About that's 15 to 1 almost. But you get the point. That's that is really nice icing on the cake in addition to the core type trades that we're doing. So you might look at this and go, or earlier on those trades and like, well, make 12%, but if you do that on a consistent basis, it really adds up. This you're making, in the hundreds and hundreds of percent. You know, Potentially you could potentially do it every day. Now they don't all work. Of course, they don't all work. But if they don't, we're risking very little. Here's some more of these trades. That was that one for 1150. We made 500 on that one. We made 500 on that one. Made 400 on that one. And again, it's all over the board depending on, are we going to hold this trade? Are we going to scalp it? Or are we going to hold it for like a pinning play? I tend to want to scalp these and make 500 bucks and get out. $750, get out, $1,000 and get out. If we hold these and they do work, that's where you make $3,500 or $5,500 or $7,500 or something like that. Um, but again, it's how we play these, and we play it based on what the charts of that day are telling us and what we think the probability of that trade actually working out is, right? And you got to know that stuff. And again, that's what I will teach in this program. All right, here's the cool stuff. This is the bias portfolio from 2013. Now this is on a monthly basis. The blue lines, every line is a month. The blue lines are positive months, winning months. The red lines are negative months. You can see, I told you 74% win rate. This is over 9 years. You can see it. There's not that many losers, right? Compared to all the winners up here, right? And again, that's since 2013, 9 years. So 2023, we will have 10 years. And in the bias portfolio, every single trade from back to trade one is documented. The type trade, the day we went in, the price we paid, the day we got out, and we all did it live together with people in the trading room with me. And so it's pretty cool to have been able to do this over that long a period of time. And again, I want to help people figure out how to do this and do it on a consistent basis. Learn how to fish. I mean, you gotta know this, right? Um, Bias. I keep mentioning bias. The mentorship is the foundation of all the trading, all the strategies, how to get edge, how to enter, how to exit, all that kind of stuff. And then bias dovetails into that for a source of trade ideas. Now we do a lot of education in there as well, but it's only scratching the surface compared to what the mentorship is, honestly. Um, but the bias program, again, you've seen the results there. There are hours and hours of you know breakout sessions going over trades and all that kind of stuff, but it pales in comparison of the amount of material that we have in the mentorship, which is we do classes, live trading, all that kind of stuff. So um, again, the foundation of all this is the mentorship, and then the bias kind of dovetails in from that. So let me show you this. So this is testimonials from people that have taken this. And again, I've had a lot of people that have taken it 2 times, some even 3. Gives you all the tools you need to be successful. The mentorship's the best strategy I've ever had, best strategy class I've ever had. Bruce manages risk well. In my opinion, he's the most consistent trader with simpler trading. This is what's cool. They're rarely in situations where I'm really worried overnight, right? I want to sleep at night. I don't want to worry about trades. Wake up in the middle of the night and check your phone and go, oh man, the S&P's up 60 or down 60, whatever, and I go, yeah, it's okay. We can handle it. Explains all the scenarios, and so you can make the best decisions for yourself. Bruce is a real deal. Very methodical. I am very methodical. Grown confident in my abilities to replicate his methods and provide a consistent income for myself. And again, it depends on that's why I want people that are serious in the mentorship. It depends on what you're trying to accomplish. If you're got a Vegas mentality, that's great. We can do lotto ticket trades and all that kind of stuff. But I'm trying to help people build long-term growth and consistency in their portfolios. So the hybrid income formula, the blueprint, again, you know, we're crushing it this year compared to everybody else. Um, and I don't think I have returns in here from the other years, but last year we were right at 50% last year, 46%. I think it was 45.84 or something like that last year. And I'm tracking, I don't know that we'll match that this year, but we might. I don't know. We still got time, plenty of time. But let me show you what it includes, and because I want everybody to feel comfortable, make the decision for yourself, and feel comfortable about it. So here's the menu of everything that it comes through the mentorship and bias. And I will just very quickly. So bias is about $200 a month, $550 a quarter. The mentorship's $5,900. This is dirt cheap, in my opinion, for what you get. I have paid, like I said, I'm well in the six figures, not high, probably $100,000 on mentorships over a 30-year period. But I've paid way back in the day. I did a mentorship course with a guy. Again, it did help. I paid $6,000. That was like 15 years ago. So with inflation, I should be charging a lot more than this, but I'm joking. But you really, really, really get a lot for your money here with this, with the mentorship, because I tie all this stuff together in a clear and concise process for us. And let me show you how it works here. We can come back to this, but let me show you how it works. So the mentorship comes with a full year of bias. So you get the foundation, and then you get bias to come back and do trades. And you've seen the profits and the bias. We do live trading in the mentorship as well. So combining those two together, it's the best of both worlds. It really is. Where's my clicker there? Okay. So these are these 7 classes. So we've got 7 classes, right? And the way I like to do it, let me tell you a quick story real quick. We used to do these live in Vegas. We'd go to the Mandarin, we would rent a ballroom at the hotel. It was so much fun. Everybody liked coming, and we'd all go to Vegas, and then we'd gamble, and it was great. We'd go eat a big steak and a lobster, all that kind of stuff. But we go in the ballroom, and we do for like 3 days intense training. And so we'd sit, and everybody's just down in coffee all day long, because we're trying to do, I do a class, and then we're trying to do some live trading and another class and live trading. And it's too much material. You're drinking from a fire hose. That was the most common thing that I heard, drinking from a fire hose. And so I said, okay, let's rethink this. And I said, let's do the way that I like to do. I think you learn best is to do a class and then live trading, and then a class and live trading, and put what you learned in the class into action with the live trading. So class, live trading, class, live trading, class, live trading for 7 weeks. And these are the classes. And the mechanics of execution, great class. This is all about how to get edge on a trade, how to enter and exit orders and complex orders. There's a very good reasoning for entering or exiting trades, no matter what the trade is, that can really make a difference in your profit. And it's there's a lot to it, but that's a really, really fun class. We do that the first day one class, because that's the most important and will affect everything going forward. Then we do, of course, iron condors, calendars, double diagonals, butterflies, defending. I love the defending class. We go in deep dive on defending all of the previous type trades. So we go into condors and iron calendars and diagonals and butterflies in the defending. Then we tie it all together with portfolio management, which is, how do you trade a portfolio? How do you look for risk in a portfolio? How do you define it, right? How do you grow an overall portfolio? Is, having overlapping trades, is it good or bad? Well, it depends, right? And again, tons and tons of material here. You will not be disappointed. This this is a from someone that took the mentorship. Holy guacamole, so much to absorb. Can't believe the amount of content you share with us. Bias and mentorship has changed my trading life. So, I mean, again, it is, and I love to hear that, because it makes me feel good that what I'm doing is worthy and working and worthwhile. And again, people come back for more, over and over. We see this all the time. Again, 5 live trading sessions, got 7 classes, 5 live trading sessions. There's not really a live trading for um, portfolio management, for example, that type thing. But on the strategies, we have 5 of those. On one of the last mentorships, we made $6,400. We had 10 trades, and we had no losing trades in the mentorship itself. We made $6,400, and I was just trying to cover the cost on that. We could have made more, and a lot of people did if they sized up more than I did. But I said, my goal is just to cover the cost on this thing, and I like to do that. Well, of course, we can't guarantee it. A lot depends on the market and all that kind of stuff. But we've done it quite a few times over the years in the different mentorships that we've done since we started doing the mentorships in 2015. So we've been doing it, for quite a while. Again, this is the intro class. I mean, this is really, 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 really a good class. This is how to get edge, again, how to fish for better price, how to get fills and all that kind of stuff. And put combo trades together and take them off. It's one thing to get in a trade, but what about taking the trade off? And sometimes if you're up $1,000 and you take the trade off wrong, now you're up $700. Or if you get a great price, on each leg or whatever, you make 1,000, maybe make 1,200 or whatever. But if you've done that before, it can really make a difference in entering and exiting, the trade. So I'd really try to stress that. And that was right out of the gate what we do. Double diagonal is one of my favorite trades here. I don't ever do this class outside of the mentorship. Over the years, I've been doing classes at Simpler with John since 2000 and I think 11, I believe, or 12. And, I've done a lot of these, kind of one-off things. I feel like it works better in a package like we're doing here to, um, synchronize everything together and how these trades kind of play off each other and how to compare them to each other and to know when to use which one, all that kind of stuff. But the double diagonal is an amazing trade. You've got to know that trade. Really, really fun trade and very, very cool to do. The lotto ticket end of the day trades I've shown you there, where I'm trying to risk 100 to make 1,000, the 10x type trades. This is included in there as well. Very straightforward formula that we do to do that. And we'll do those in live trading as well. And of course, we'll try to hit some of those home runs in the live trading. And then we do coaching calls, depending on how it works out. We have a very small, very intimate groups, and I will answer specific questions about whatever you guys want to talk about, actually. And basically, it is what's working for you, what's not, that kind of thing, and what do you need more detail on, for to help you get to that next level. And we really, really focus on that. I really like doing the coaching calls. They're a lot of fun. So again, all of that is included in the mentorship package. This is a la carte, and the mentorship package again is $5,900. I think it's well worth it. And we do have a available now, interest free, with PayPal credit. If you guys have used PayPal or PayPal credit, of course, about that, and that does make it, honestly, it makes it a lot easier. And you got 6 months, 0% interest for 6 months. That's pretty cool, right? Because interest is going up with inflation. We know that. And that is what I've got for you. I really appreciate everyone being here tonight, and I'll absolutely will answer some questions and talk about this. I want everyone to really seriously consider this if you are serious about your trading. It's if you want to get to the next level, if you're serious about it, in my opinion, you must do a mentorship program with someone. Even if it's not me, you've got to do one with someone. Um, Even if you're advanced, I think it helps. I mean, I still learn stuff all the time from people. Trading, have a trading partner, that type thing. But again, I've put this into a very clear, very thorough program. This is like a couple of college semesters, tied together essentially. So with that, let me jump over here to the questions and see what you guys have got. Uh, Lee, how's it going? Do we mostly trade ES and SPX as in the gold room, or do you also do same trades in other tickers? Both. I do primarily SPX, and the reasons are there is a tax advantage to doing that. You may know there are 1256 contracts, but again, we have overnight action in the futures. We get, I think, a lot more accurate charting ability, and ability to use technical indicators to track the ES and the SPX and the SPY for that matter, to give us more accurate entry and exit and that type of thing. But that being said, in a quote unquote normal market, I will trade Google, Amazon, Apple all day long, stuff like that. I trade, I have a handful of kind of favorites. I'll trade Costco, Home Depot. I trade the defense. I trade Lockheed Martin, Northrop Grumman, stuff like that. Kind of one of my. I have some favorites. I like Kroger's, KR, um, CSX. And again, I'll do a variety of things with those. We'll go through these different strategies and see, kind of what works best. In this current environment, I think it's harder to trade individual tickers than trading the indexes. You want to trade the ocean and not try to pick the boats. In my opinion, it works better. And of course, you've seen the results, the numbers. John says, is it if it's because volatility is lower in a nice smooth trend? Yes and no. Yeah. So here's the thing. So when we do have lower volatility, right now we got a lot of volatility, right? We've had some really good years in low volatility. When you have lower volatility, things are much easier to trade as far as trade management. You don't have to get into crazy, overnight swings and defending trades and that kind of stuff. But it also goes back to what kind of vehicles work best. So in a super low vol environment, say for example, VIX is at 12, you're not really getting paid much on your iron condors or credit spreads or things like that. Um, Calendars, you have a good flat skew and you don't have to worry too much about vol crush and that kind of thing. So there's pros and cons of both, low vol and high vol. I mean, you're correct. Things to me get easier in high vol, because I do like to sell some premium, but you can take that same, those same concepts and apply them really to any market. Because again, I've been doing these core strategies for 30 years, honestly. The account size for bias is we don't really have a set account size. I would say again, I set it at $50,000. Um, I have kind of bumped it up. I kept it at 25 for a while. But at 25, you get into pattern day trading if you're under that and all that kind of stuff. Um, so the on the COVID year, 2020, we started with 25,000 and we ended up at 75 or something like that. So, or maybe a little bit more than that. But so I took it back down on January 1st to a round number, $50,000. I do that every year. And again, the reason I do that is so that everyone has kind of a good idea of this on the sizing and can size up or down according to their own account size. So everybody's trading different account size. Some are at 80,000, some are at 20, all over the board. So I will say, this is based on a $50,000 account. Here's what we're going to do. We're going to put $5,000 in this trade or whatever. And also I will, I'm happy to say if I'm using SPX, you can use SPY. If I'm using RUT, I just put a RUT trade on yesterday. And I gave an IWM example. So it's very easy to size up or down from there. And we talked about up in the size one time. I thought about saying, let's do, 250,000 or 150 or something like that. We could do portfolio margin and all that stuff, but that kind of knocks out a lot of people to smaller accounts. And I don't want to do that. So I think it makes sense to be able to size it up or down. And that's a reasonable number to do that from. And the mentorship's kind of the same. It's all over the board, really, really all over the board. I'll tell you a story. A story from last mentorship. I had a guy join mentorship, new trader, and he said he was trading a $5,000 account, and I said, "Well, you paid $6,000 to do the mentorship," and he said, "I know, but I want to have the right foundation, and I want to grow this, and I'm going to be here for." And he's still here, still trading. Everything's great. Um, it's easy to add money to an account, right? But so, and his point, which I totally agree with, I can sit here and watch and learn, and over time, I build this thing up, and versus, I've got $50,000, I'm gonna drop it all in here and see what happens, So it's whatever you're comfortable with. Um, John. Oh, okay. Oh, okay, John. Okay, I get it. So John was asking that question about uh, trading big trades for lower return versus smaller trades for larger return. Yeah, yeah, exactly. Yeah. So yeah, and you're exactly right. So when we're in a trending market and vols are down, yeah, I will, I'll put more money on the line because it's a safe. Well, I hate to say a bet. It's a safer bet. It really is. If I have a much higher probability of profit, that kind of thing. Um, I'm willing to put the chips on the table. And I know you probably heard the expression before. It's like, there's a um, time to load up and the time to, you know, be careful. And right now we're in be careful mode. Michael, how's it going? What are some things you'll have to, what are some of the things you'll have us work on to help build our own blueprint and business plan? We do a thorough trade plan. And I do a kind of a macro plan and then a micro plan. Um, Macro plan being overall market, what are we going to trade, things to look out for, best practices, things like that. And then on a specific plan, we follow the actual steps of the trade. When are we going to exit, or when are we going to enter, when are we going to exit, what percentage are we looking for, what's our max profit and our max loss, and when to defend and all that kind of stuff. And I have some golden rules in there and that kind of stuff. But yeah, that is a big part of it. You got to have a plan to do any of this. And I go through on each one of the strategies, and we have a very defined plan for each strategy, such as literally step one, step two, step three type thing for each trade strategy. This is how it works and all that kind of stuff. So um, that's that, and we tie a lot of the psychology aspect in there. That's a huge part of trading. So it kind of weaves all that together, but we definitely have, that's a big part of it. um, Alex, how much experience is needed? Alex, it is honestly all over the board. um, I would say I would prefer for someone to have basic knowledge of calls and puts, you know, pricing, say long calls, long puts, maybe debit spreads and credit spreads, kind of the basic stuff. Not totally necessary, but it would be better. And again, I've had people with virtually no experience that have taken it and said it's great and they love it and all that kind of stuff. And I'm always like, well, remember, whatever experience level you're at, you'll have this. Of course, you get the recordings. You own it. Once you have it, you own it. And I promise you, you will look back on the same material 10 years from now. And and I encourage people. I'll say, get a cup of coffee on Saturday morning and watch an hour, 45 minutes, or whatever. And I promise you will pick up things that you didn't get the first or second or third or fourth time through it. Just because there's so much material there. So it is really hard to say. Um, I mean, I would say this, because this is not specifically geared for any level. It's for all levels. I think even I know pretty advanced traders have taken it and still get a lot out of it. Because again, it's kind of the you don't know what you don't know kind of stuff. And so it's real hard for me to say, but I would say, you got to have a basic understanding of options and have, put on some trades and all that kind of stuff. I still think, honestly, I still think you would get a lot out of it, but you would probably get frustrated because, you would, if you had never traded an option before in your life, put it that way. Alex, is possible to do with a full-time job? Absolutely. Yep. Everything we do is recorded. The strategies that we do, and I don't mind telling you, we typically go, as far as an expiration goes, we typically go 30 days, 45 days, 60 days out, something like that. So I try to make them a set it and forget it type trade. However, in this market, that's not really feasible because the market's so volatile. So I've kind of brought in the time frames on these trades a lot more and incorporated a lot of the lotto tickets and weekly trades and all that kind of stuff. I'll always include the weekly trades in there just because they work and they work pretty quickly. But you could do these trades fairly easily, with, and I have a lot of people that have, full-time job, and in the bias portfolio and in the live trading too, you'll get an alert. And I always try to go, hey, heads up, I've got a trade I'm going to be putting on in 15 minutes. So if you're, if someone's out and about or whatever, pull out your laptop and get ready because the trade's coming, right? So I do try to always give people a heads up that a trade is coming. So that, that can absolutely still work. I know a lot of people do it. Let's see. Ernest, how's it going? On a per trade basis, with a profit and loss percentage targets. Great question. Generally on a per trade basis, I try to get, and it is a range. I try to get, ideally I like to get 20% on profit on a trade, right? $10,000 trade, we want to make $2,000, or $1,000 trade, we want to make 20 or $200, whatever. Um, Again, in this market with the volatility, if we get 10% pretty quickly, maybe we take 10%, 15%, something like that. But by the trade plan, we want to get somewhere, we want to be hitting 10% to 20% kind of range. On the loss, that's on profit. On the loss side, you got to give it a little more wiggle room. So I'd say 25 to maybe even 30% on the loss side. It's not 100%, but we got to let it go 25%, a little bit more on the loss side. But the losses, you have so many more winners than losers, generally speaking. Jack, great question. How long are the classes? The classes are typically, we go anywhere from 2 to 3 hours on a class. They're recorded. I know some people will watch them or they're of course live. If you can't be there the whole time, you can come back. They're posted that night. You can watch them that same night or whatever. Same thing with the live trading. If we do live trading, which is 2 hours, that we do live trading, and we typically do go over the time a little bit, but on both the live trading and the classes. But if you can't be in a live trading session physically, you still get the alerts and you can still put a trade on, or you could take the trade the next day. And actually, a fair amount of people do that. Sometimes you actually get a better price, sometimes you don't, that kind of thing. But again, and we do it on Tuesday, Thursday. So we do Tuesday class, Thursday live trading. Typically that's what we do. And I think it's enough time, but not too much time. So I hope that makes sense. All right. Well, I think that's about it. Again, I I feel very strongly about the program overall, because again, I've learned from so many mentors over so many years, and I've paid so much money over so many years, and it never felt like it was um, a cohesive program. It just kind of felt like, try this and try this and try this and try this. And what I wanted to do is put together something that's, I hate to say soup to nuts, but that's what it is. It's start to finish, A to Z, that kind of thing. And it's all in one place. And, one thing builds on the next and builds on the next and builds on the next. So, and again, I've used this for over 30 years, and I've trained a whole lot of people. So anyway, I know it works. So I appreciate everyone being in here. If you are with Simpler, of course, I'll be in the main room tomorrow. I'll be in the bias room tomorrow. I'm in the bias room whenever we do trades, entry or exit or anything like that. And we do breakout sessions all the time. But I'm in the main room as well. That diagonal trade that you guys saw, we have that on. So we'll be taking that off tomorrow, hopefully for a little win. But if you have questions, of course, ask. You can always call customer support. There's a lot of people there to help you. I can help you. I'm a little bit harder to get to just because I'm in the room talking and trading all day long. And I'm not. I get tons and tons and tons of emails, so it might take me a little while to get back with you on email. So, but reach out and we will try to answer your questions and help you. Um, Brenda says, "I'm so impressed with risk graph mastery." That is the analyze tab. That is gold. I mean, you got to know the analyze tab. I should have mentioned that more. Analyze tab is how you see the risk in a trade, and it's so easy to evaluate it on the fly and all that kind of stuff, right? How often you go in the bathroom? Trying to get away from being in front of the screen. So yeah, and I'm with you. I'm trying to step away. I'm normally I literally like will eat a sandwich sitting at my desk, and I will sit there and I go, I've had to go to the bathroom for 45 minutes and I've got a trade on. I'm trying to, do something, but I'm trying to get in, but I trade a lot and I trade multiple accounts. That's a whole different thing. I'm trading quite a few different accounts. But I will be glad to help you do that. I I don't know how to really do. You know what? And Lee might can answer this. I did actually a class on the Analyze tab. Um, if that's what you're talking about, and I believe it's on YouTube out there. So um, you got to know the Analyze tab. If you're using Thinkorswim, it's just awesome. So, and I'm not sure I'm answering your question, but let me know or let one of us know, and we'll try to help you any way that we can. But again, that thing is really, really, really shows you where the risk and the reward is on a trade. So, like that diagonal trade. So, anyway, I hope that helps. And again, reach out to one of us, and I'll help you any way that I can. So with that, I know we kind of went long here, but wanted to really show you guys exactly what was in here, and how cool this program is. So take advantage of it. Ask any questions that you need to, and we will start here after Thanksgiving. But I appreciate your time, and again, I'll be in the trading rooms tomorrow, and I hope to see everybody in there. And so let me wind it up. But you guys have a great evening tonight. Get some rest, and we'll see what the market gives us tomorrow. Take care. Thanks.